All right, welcome everybody. You may have been in the previous session, but in case you weren't, I'm Joel French. I'm the Executive Director of Public Interest Alberta. I also sit on the board of the Parkland Institute, so it's my pleasure to introduce the next session today, Retooling the Labor Markets. Our speakers today are Rick Mueller and Trevor Harrison, both up here from Lethbridge. And I'll give you a quick sense of who they are, and then we'll let them speak, and we'll have a brief question and answer and comment period after that. So Richard, it says here, but Rick is a professor and chair in Department of Economics and a research affiliate of the Prentice Institute for Global Population and Economy, both at the University of Lethbridge. He's also associate director of the Education Policy Research Initiative at the University of Ottawa. And worked for Statistics Canada in Ottawa for a couple of years. His main research interest over the past dozen years has been related to the various determinants of access to post-secondary education in Canada. And he holds a BA with honors BA and an MA from the University of Calgary and a PhD from the University of Texas at Austin. Austin's a cool city.
It's a great city.
So that's Rick. He's going to be talking to us about the new Alberta economy, looking forward through the rearview mirror. And Trevor Harrison, next to me here, is director of the Parkland Institute and has been since 2011. He's a familiar face to most of you. He was born in Edmonton, has degrees from the University of Winnipeg, the U of C, and his PhD in sociology from here at the University of Alberta. And he's professor of sociology at the University of Lethbridge right now, focusing on political sociology, political economy, and public policy. He's also been author and editor of several books and is a frequent public commentator on public policy issues here in Alberta. So I think we have Rick is going to speak first, so please welcome Rick.
Thank you. Okay, the mic's on, I can hear it. Well, thank you very much. I really appreciate the invitation from the Parkland Institute. I hope you all had a chance to, or a lot of you did, to go to the function last night. It was really quite interesting, and it's quite an honor to be here, given the influence that the Parkland Institute has had on public policy in this province over the last 20 years or so. Anyway, my whole presentation here is just trying to sort of try, as it says here, looking forward through the rearview mirror. I teach a course in economic history. I'm not an economic historian, so I kind of feel like a fraud doing it. But I think it's really important for us to, we sort of in this recession right now in Alberta, and the sky is falling, and it's never fallen like this, and it'll never be the same way again in Alberta. And I think I'm a little more optimistic about things than that. So despite, if you're at Marilyn Waring's presentation on Friday night, she kind of talked about GDP. So my first slide is going to be, she talked about the limitations, so my first slide is GDP here in Alberta. So I'm trying to look back as far as I can in the StatsCan data. Okay, I'm just going to go through some basic economic indicators and then go through what I think could happen in the future. Although I think some people in this room would be quick to admit that forecasting is not necessarily a very good thing to do. So I'll sort of keep calm about those kind of things. Anyway, if you live back in Alberta as I did back in 1982, of course we went through this horrible recession in 82, 83. We had high interest rates, we had inflation, we had the dreaded National Energy Program at the time, which was sort of, I remember that clearly. Of course, we had Petro-Canada stations between Calgary and Edmonton. I used to travel quite frequently between the two destinations, and it was kind of the federal government giving us the middle finger by having to pass all these Petro-Canada stations at the time. So people in Alberta weren't too terribly happy about that. A lot of people, certainly the oil sector. So we had a recession back in 82. Again, back in 86 or so, the decline in the economy, low oil prices back then. The financial crisis is here back in 2008, 2009. A deep dip, but then a strong recovery again, and then recently here. And then we're forecasting out, these figures for 2015 are from StatsCan. I think for 2016 and 17, they're forecast by RBC Economics. So we know this, right? We're living through this right now. But if we kind of look at it, well, it doesn't look so bad in historical perspective. We sort of have some strong recoveries, et cetera. Energy. Why are we in this horrible position we're in right now? Right here. Here it is, energy prices. I could only go back pretty much with the data to, well, I could go back further if I really dug deeper, but it wasn't necessary. And sort of see here, the blue line is for West Texas Intermediate. That's the price that's quoted in the media every day, of course. WCS is Western Canada Select. That's because, of course, we largely sell bitumen from Alberta now, and of course that trades at a discount in the markets because of the difficulty in transporting and processing it. And then the green line is the difference between the two. So this is the reason, of course, we're in the situation we're in, at least a large part of the reason we're in the situation we're in right now. And I'll talk about the oil prices a little bit later on. But let's take a look at some indicators here. Things, sort of aren't starting to look too bad. I think, if we sort of look at things in historical perspective, and here are housing starts, percentage change in housing starts year over year. I could go back as far as 1980 or so with the StatScan, maybe even further. But again, here's what happened in the recession in the early 1980s, right? 60% decrease year over year in housing as it starts. Yes, housing starts, okay? And again, small changes here, and then again in the present period of time, all right? I think anybody who's in this, don't take this the wrong way, but there appear to be plenty of you that were around in the early 1980s in Alberta, and we remember that time, right? We remember people walking away, they called it jingle mail, right? You put your keys in the envelope, put on a stamp, which was probably 10 cents at the time or whatever, and mail your keys back to the bank, of course. You're paying 22% interest on your mortgage at the time, of course. People were losing their jobs like crazy. Housing values plummeted, and this was the result. Nobody wanted to start new houses. And we can look at it a little bit differently. These are housing completions, pretty much the same kind of pattern here. I think what's important here, of course, to note that Alberta is not looking too much different than the rest of Canada, at least right now. Okay, we're starting to see housing slowdowns in places like Toronto and Vancouver in particular, which are arguably very overheated housing markets. And so Alberta is not looking too bad compared to these places. If we look at average prices, this is just from September 15th this year compared to September this year compared to September last year. We're not doing too bad on average, okay? Our housing prices still go up. Obviously, if there were a real problem like there was in the early 80s, we would see more negative numbers there, as in the case of BC, of course, which is starting to cool down somewhat. Newfoundland's really been hit, obviously, compared to Alberta. And again, just as an indication here, Calgary prices, even if we go back 5 years, they're still up 15.5% over what they were 5 years ago or so. So it's not looking too bad. If the economy were in really, really bad shape, and I'm not saying it's not going to get worse, but if it were in really bad shape, of course, we'd expect to see much more dramatic negative numbers there. Okay, housing values go down as people leave the province. They, move into more modest accommodations, move back with their parents, whatever. So the labor market, I'm a labor economist, so I'm going to sort of concentrate on the labor market because I think that's certainly what's important for most people, obviously, how the labor market is doing. And again, if we look at unemployment rates, these are just the rates you hear every month. It's in the news, they're quoted in the media all the time. StatScan releases these every month. The red line is for Canada, going all the way back to, from December 1981 all the way to the present. The most recent data are for October of this year, so last month. The red line's for Canada, and the sort of green line at the bottom is the differential, okay? And of course, usually the unemployment rate in Alberta is much less than it is in Canada, so the green line's going to be below the zero axis there. And now, of course, recently our unemployment rate shot up relative to the national average. And we're not used to that, right? Of course, back in the 80s, we had a higher unemployment rate as well. But it's been, all the way since the 1980s till present time that we've actually had this unemployment rate that's higher than the national average. So we're not used to that. We're used to being, a couple 3 percentage points below the national average. Again, we could look at it by region in Alberta a little bit. We sort of see it going up all together. You probably heard in the media too. Of course, I sort of highlighted Calgary and Edmonton, the two major labor markets. And of course, the unemployment rate for Edmonton is much less than that for Calgary. A lot of people, of course, in the resource sector in Calgary have been laid off and given golden parachutes or not, et cetera. In Edmonton, much more of a government town. Arguably, that's the reason we see less unemployment in Edmonton compared to Calgary. What's interesting here, Wood Buffalo, Cold Lake, the line at the very top there, those series kind of abruptly ended about May. And of course, the reason is because of the fire. They haven't been able to complete the labor force survey appropriately up there. More indicators. EI beneficiaries. I could only go back to September 98 with these, but again, we sort of see, and this is as, so year over year changes again. So we have a huge spike after the financial crisis in Alberta, up over 200%. Applications were up over 200% or beneficiaries up over 200% at that time, which makes sense because, of course, Alberta has a very low base to begin with, so any kind of increase is going to be seen fairly dramatic. But again, if we sort of compare today with what happened back then, things are looking better. Now, this is not the best measure of unemployment, and the reason because, of course, not everybody's eligible for benefits, and we're not sure exactly here with this decline how many of those people just lost their eligibility for benefits and therefore stopped collecting those benefits. Nobody can be sure. Another way to look at the labor market, if you're not already bored with statistics, is looking at, I'll just go through all these at once here, I'll put them all in, is looking at labor force participation. And these actually showed up a lot nicer on my on the screen than they do up here. It looks looks like something you put on the fridge that the grandchildren drew for you. You might expect a little more, but anyway. Anyway, the blue line, I mean the top line here, this is for the top two lines there, we'll look at them together. Those are for sort of what we call prime age working people. Those are people between the age of 25 and 54. So we basically capture people after they're finished their education and before they retire. So these are the people, especially males, but more so females as well, that tend to work during this period of time. The second group there is for younger people, okay, in Alberta, 15 to 24 years of age. And then the bottom lines here are for elderly people, okay, so people over 55 years of age. And we basically see labor force participation is usually in tandem with the unemployment figures. It's usually a good thing to kind of look at, because if there's going to be some people, in order to be considered unemployed, you have to be in the labor force and not working or looking for work. So a lot of people, what we call discouraged unemployment, they might actually leave the labor market. Just, people were laid off 18 months ago, have really tried to find a job in their field or elsewhere, and they decide, I can't do it, I'm just going to stop looking for work. So all of a sudden when the nice Statistics Canada people call you and say, were you looking for work last month? You say no, boom, you're out of the labor force. So we expect these numbers to come down if we saw a lot of discouraged unemployment. And they are a little bit, okay? I mean, the prime age working people, not a problem. Younger people here, the first thing to notice here, I think, is Alberta is always above the national average. We have a very strong, we always have the highest in the country labor force participation rates. And certainly the top group there, the prime age working people, yeah, their labor force participation hasn't really changed much over it's sort of steadily gone up, but certainly compared to the Canadian average hasn't changed much. The middle group, the younger people, I consider this to be a good thing. Their participation rate has fallen in Alberta, compared to what it was. Okay, and that's a good thing. We see this at the universities. I suspect anybody who's an academic here or has affiliation with the university sees that. Enrollments have gone up big time in the last couple of years, not just for universities, but also, and even more importantly, is my understanding, for colleges, because they're shorter programs, of course, and people can retrain during this period of time. So it's not necessarily such a bad thing that the economy's kind of going south in terms of the long-term kind of prospects for the province if people are becoming more educated. Okay, what next? So let's take a look at this. Again, we hear a lot of stuff in the media about job losses. And this is sort of what, again, I went back all the way to the 1980s and looked at the year-over-year job losses. Okay, and they look pretty bad. Okay, here, if we go back all the way back to March 1983, we lost, compared to a year earlier, some 66,000 jobs were lost. Seems pretty bad. It was pretty bad. Okay, October 2009, over 80,000 jobs lost. And the sort of the valley here, most recently, 53,000 jobs lost. It seems pretty bad. Okay, and it almost looks as bad as it did. The good thing, of course, about the recession in after the financial crisis was that we rebounded very quickly, obviously. Not so much back in the 1980s. But also we want to remember, compared to the 1980s, our labor force is twice as big as it was then. Today it's twice as large. So if we sort of look at this as a percentage of the labor force, these same numbers divided by the labor force, it was much worse in March 1983, right? 5.25% decline in the number of jobs versus a year earlier, okay? Even in October 2009, a large decrease, 3.75%. Compared to the valley here, the most recent recession, 2.2% job loss. So it's not looking so bad. Again, we sort of look at, back at things, as I sort of said by way of introduction, the paper is always full of doom and gloom, right? And if we sort of look at these things, it might be Small consolation, but it's a little more cheerful, I think, to look at them this way. This is what concerns me more than anything, I suppose. And again, I didn't do this as a percentage of the labor force, but what's really dramatic here, the red line is part-time jobs and the blue line is full-time jobs. We've lost a lot of full-time jobs, okay? And again, if I sort of corrected for the size of the labor force, it would have been worse back in the 1980s, but still, this is a cause for concern. A lot of those good, high-paying jobs are being replaced with inferior sort of part-time jobs, something you've probably heard before. What else do we have here? Males and females. Over time, the red line is for females, the blue line is for males. Again, males much more volatile employment. That's largely because of the sectors that males tend to be working in. Much more employment volatility in those different sectors. Speaking of sectors, let's take a look at, let's break down the data a little bit by sectors here. The blue line in the middle there is just for all industries in the Alberta economy. So we look at the employment in all of those. And as a percentage of the labor force, I don't even know what color that is. I'm male, we know the primary colors. Somebody help me with that one. It's like turquoise or something? Okay.
Turquoise is close. Yeah,
turquoise, I'm going to go with turquoise. I'm going to go with turquoise, okay. So the turquoise line there, again, not any big surprise here. How far do we go back here? I could only go, at the sectoral level, I could only go as far back as 1988, so we don't have the recession of the 80s, the early 80s to compare with here. But again, obviously a lot of volatility there. This is for basically people involved in the resource extraction. Okay, so up in the oil sands in particular and elsewhere in Alberta. Again, starting to recover now, which isn't so bad, but certainly at the valley just as bad as anything we've seen before. But we want to sort of, look at the peaks too, and the peaks seem to be higher than the valleys, which on average is hopefully a good thing. Here, this is mainly for people in Calgary, or a lot more people in Calgary, professional, scientific, and technical services. So these would be the engineers and the geologists and the people like that. Again, a lot of volatility in that industry, but not terribly bad. And again, we're starting to see some sort of changes here towards the end of the period. So things are kind of picking up for this group of people. I think what's different in this recession too, and there was a paper released by the School of Policy Studies at the University of Calgary on Friday. Of course, just when you're scrambling to get your presentation together, they keep bringing out new information that's relevant. But they were basically talking about the integration of the Alberta economy. And we're much more diversified than we were, they argue. And I think that's true. And I have seen data to that effect before as well. But the problem is, I think, is that we're much more integrated than we used to be as well. So we're seeing this, of course, decline in the oil sector. And so it's going to, impact the employment directly in the resource sector. But it's also going to impact people in Calgary, obviously, which these people a lot of them are directly related. But to the resource sector, but things like manufacturing too, okay? So we're starting to see this, huge decline in manufacturing. So I suspect, and I maybe somebody can fill me in on this, but if I had to hypothesize about this, there would be, back in the 1980s in particular, there was much less manufacturing activity related to the resource sector than there is today. Okay, a lot of the things were imported, come from other provinces, et cetera. So I think that's why you see that big decline in manufacturing employment in this province. Construction. A lot of construction in the province doesn't seem to be too hard hit. If we look at the end there compared to the previous periods here, the red line, okay? And I suspect that has a lot to do with the Rogers Centre in Edmonton. It has to do with a lot of construction going on elsewhere in the province. Whether or not this is going to be sustained or not, I don't know. Okay, we start to see there's been a decline in the number of the value of the building permits issued recently. So I expect construction might be a little bit harder hit a little bit in the future compared to what it is today, as these projects that are sort of were on the go a couple of years ago when the recession first hit. Once those are completed, we might not see employment so robust in construction. Okay, other economic indicators. Interprovincial migration. This is, again, I remember this period quite well. We used to be a red cap at the train station in Calgary back during this period of time. And the red cap for the young people in the audience is a porter. And so I would help people with their bags onto the train. This was my first, while I was going to university. It was a great job. But anyway, so I helped a lot of people leave the province during this time. And so I remember this period. The green line here is sort of net migration. So if it goes below the zero here, that means people are leaving more than they're coming into the province. All right? So a lot of people left then. We don't really see that same thing happening after the financial crisis or today. A little bit, but not to the extent that it was. And then again, if we sort of standardize these things by percentage of the population, we see again, large losses of population at this period of time relative to the current period of time. We also see, another thing that's interesting is migration is just less common than it used to be, right? Back in the 1980s, there were a lot more people that left the province and came into the province for that matter than there are today. Migration is becoming less and less of a factor in our economy and in the Canadian economy in general. But obviously, if the economy were doing really bad, or at least people didn't have hope about the economy doing better, I would expect that green line to be much more lower than it is today. Okay. Another thing, international migration, that's another kind of thing. Huge jump in, if you know anything about immigration, our number of immigrants we admitted to Canada last year jumped up to about 320,000. And certainly we took a lot of those in Alberta as well. So there's quite a jump. Whether they'll stay or not is a different story, of course. Once they arrive in Canada, we can't force anybody to stay. And these are permanent, this is permanent migration, not temporary foreign workers and things like that. Other random things. Consumer debt and delinquency. Average debt in Alberta looks like it's the highest in the country, $27,500 per person. This is back in, where was this? I'm standing too close. Okay, thank you. So back then, and then of course the delinquency rate, this is people who are late on their payments, et cetera, big increase compared to the national average a couple of years ago. But sort of, when the rubber hits the road here, we're going to have this annual insolvency rates. These are for consumers. So insolvency basically means you're bankrupt or you're about to declare bankruptcy here. And this is just for Calgary and Edmonton. I can't get the data any finer than that, unfortunately. But it's not looking, again, if we sort of go back all the way to 87 here, which is as far as we can go back, it's not looking too terrible. Not great, but, again, much bigger impact, as you might imagine, with the financial crisis on consumer insolvency, and starting to tick up a little bit. But again, in my mind, it could be a lot worse. It can always be a lot worse. Economists, despite our reputation as being the dismal science, we're a pretty optimistic bunch, actually. True. Here's the one, my favorite slide. Passenger cars and trucks. Alberta's in trouble when the number of trucks go down, right? We're in Alberta here. That's the green line in the middle, the number of trucks. And so we go all the way back. Here's the recession. Again, I should have normalized this for the size of the population a bit, but of course, there are, much fewer people living here, 35 years ago. But the trucks have gone down. There's a bit of an uptick if you use the monthly data. These are annual data that I've put together here. But the monthly data, there was just, again, as I was preparing these slides, the Stats Canada released new data showed an uptick in automobile sales in the last month, August, I think it was, maybe September. So, we're in trouble when those go down, and they have, which is not a bad thing. As my students will tell you, I go on all sorts of rants about pickup trucks. Public finances, here's a bigger problem, I think. Here's what's interesting. This came out, this is just somebody compiled this series here, looking at resource royalties as a share of the Alberta government revenue at the time. And we know this is the problem we're having here. So here's, from the government budget last year for this fiscal year going down, okay, quite a bit, the royalties. That's where we're really hurting compared to the previous recessions that we had. And this is my favorite quote. This is not only because it's kind of, I can kind of poke fun at Edmonton being a Calgarian. Okay, this guy was this came from the Edmonton Journal. You remember the coup d'etat? And I still try to wrap my head around this. Alberta's first plebiscite warriors. I have no idea what that means. Maybe somebody smarter than me can fill me in on that. Okay, but anyways, what he said, this is George Clark. For them to say that all the troubles of low oil prices are because of the low oil price doesn't make sense. Right away. It's a non sequitur. They're crazy. Alberta survived $10 oil. We survived $15 a barrel oil. It's right now, close to $35 a barrel. This has nothing at all to do with the price of oil, and that's from back in March this year. Well, unfortunately, that's not true, and this is why. It's from the Alberta Royalty Review, which was, about a year ago it was released? Taking a look at, these are just sort of the amount of money that comes to the Treasury, the total royalty revenue. The black line is for bitumen, okay? The black segment of the bar chart there. The yellow part is for conventional oil and the red part is for gas. So obviously bitumen is a much bigger share of those revenues than it used to be, okay? And this is what the problem is, because now, of course, we're producing so much more of it. Even though, I think fracking is, certainly fracking, I don't know, does anybody know? Fracking's probably picked up in Alberta. Certainly when I drive along, I've been driving between Calgary and here, or sorry, between Lethbridge and Calgary, and I seem to see a lot more pumps out there than I used to, even in southern Alberta, okay? And I assume that's because of fracking. But anyway, right now the bitumen is the big thing, and of course that's, the royalty rate on that is much different than on conventional oil or natural gas. And so here's what our non-renewable resource revenues look like in Alberta right now, okay? All the way back to 1970. Of course, things really took off in the 70s, came down in low price of oil here because the royalties, again, up, and then down in the financial crisis, and they're really low during this period of time here. So this is just in, are these in current dollars? So these are standardized, but so obviously royalty rates in 2014, or this should be 15, 16, it doesn't show up on the axis there. So for 2015-16, they're as low as they've been since the late 1990s, okay? So it's, and of course, much lower than they were throughout most of the noughts in this century. So that's a big problem, and this is what the real problem is. Resource revenue is a percentage of the total revenue at historic lows, basically. It hasn't been since since we discovered oil in this province, basically in the 40s, or in a big way, of course, that they've been so low. And there's the problem. You sort of think about this, and if you sort of look at the difference between this line and this line, and there's our deficit right there, okay? So that's the huge problem we're having right now, which isn't necessarily a big problem, because of this. Here's our debt. What we look at, and certainly what bondholders and rating agencies are going to look at, is the amount of debt we do have as a province. This was a couple of years ago, of course, and what we're doing here, this is net debt, so what we're doing is basically spending our heritage fund because of the deficit. But even then, if we project to the next fiscal year, current fiscal year, we're still in much better shape than the remainder of the provinces in terms of the debt, okay? Now this has to be dealt with eventually, and as Larry said in the last presentation, and I agree with him 100%, there's been a lot of emphasis put on debt, right? You always hear this nonsense, or I think his words might have been bullshit, well, you can't run a deficit in your house and you can't have this household debt. Well, we're different, okay? Governments are different. They can do this. We can't, okay? I mean, there's going to be a limit to government debt as well, but basically they can, borrow, and they can, they can do something you and I can't. I can't float bonds. Nobody's going to buy, Rick Mueller bonds on the bond market. They'll buy government of Alberta bonds. Maybe some people would. I should try. Anyway, here's some more good news. Here's the energy sector again as a percentage of the Alberta GDP. It's gone down from over 40% to just, about 9 percentage points or so, I think, between 97, which is as far back as I could go, in 2015. If we went all the way back to, the 80s or something, I suspect there would be a more dramatic drop in all of this. So that's kind of good news, I suspect. But I think, again, as the job figures suggested that I presented before, we're much more integrated as well, okay, the economy with manufacturing and services and things like that. So what's next? Here's sort of my speculation. What's going on? Again, I sort of focused on the labor market. It's going to get worse or better. I suspect it's going to get better, okay? The problem is, of course, EI benefits. A lot of people have their benefits exhausted, and I know certainly people, especially in Calgary, that received golden parachutes, in return for their resignations. How long till that kind of money wears out, right? And I have no answer for that. Discouraged unemployment. I said before it wasn't much of an issue. That could change. Are we going to see some problems from bankruptcies? I don't know. I don't forecast. So. More family members entering the labor force. We see this certainly now going on. If I kind of dissected the figures a little bit more, a lot of times, of course, when one spouse in particular is laid off or loses their job, the other one's going to enter the labor force if they weren't in there already, or perhaps start working more hours, etc. And what about net immigration and migration? So migration is just between provinces in Canada. Immigration, of course, is from abroad. Is that going to decrease? I don't know. We're starting to see the beginnings of that. The housing market. Housing market appears to be reasonably stable. The reason we sort of look at the housing markets, economists, is because it's sort of a bellwether for what's going on in the economy. And obviously people don't make, well, most people don't make big purchases of things like trucks and houses if they expect their incomes to not be adequate to service that debt. So in the early 80s, remember the early 80s? I mentioned those housing values decreased by 20%. People were walking away from their houses, if you remember, especially in Calgary, where I was at the time. Mortgage rates, 22%. Mortgage rates last year when I looked were for a 2-year mortgage, 2.14%. Quite a difference. Okay, and obviously that impacts your ability to service the debt when they have such a high interest rate. Back in the 80s, also we had fewer two-income families. So we have some stability built in that way because, of course, there's many more two-income couples out there that are working. Or maybe even more than two incomes. Of course, a lot of young people are working as well, which brings some stability to everything. But of course we have, as a province and as a country, we have historically high debt loads. And this is certainly what's of concern to CMHC. I think just came out last week and recommended, was it CMHC? Somebody came out anyway and recommended increasing the amount of the down payment that was necessary based on the price of a house, going from 5% for those under $500,000, to 10%, and then increasing the down payment on housing with a value higher than $500,000. And that's, again, just to sort of, there's been a lot of sort of what we call stress testing on loan portfolios and see what would happen, of course, to these mortgages if interest rates were to go up. Could people continue to afford to pay for these things? But that kind of worries me. Other markets, as far as I can tell, look reasonably stable. Here's the big one for Alberta. Will energy prices rebound? I don't know. Increased growth in China and globally. China's slowed down a lot, so is the global economy in a lot of ways, but there's still a lot of growth there, okay, going on. And of course, a lot of effort to make our pipelines to either coast feed this demand. Pipeline capacity is increased. Is that going to be increased? Looks like it will be, for better or for worse. Okay. The frac log. Frac log is just there's a sort of I don't know who came up with this term, but it's just basically deal with fracking. And of course, what they do now is just leave that oil in the ground. They frack it, and they just sort of leave it there. It's a storage system now for oil. You don't have to pump it out, take it through a pipeline, and put it in a storage facility before you process it. It just sits there. But there's a huge amount, of course, of fracking going on, especially the U.S. Somebody mentioned in a presentation, was it Paul Coelho yesterday? Talked about that, and certainly, this was the big reason for the decline in prices. It wasn't the fact that the Saudis kind of opened up their taps again. It's this huge amount of proven reserves in the United States, especially in North Dakota. But also, we got the Permian Basin, the old Permian Basin in West Texas, that's opened up again. Estimated 20 billion barrels. Was it 30? 20. Because they estimate it's almost worth $1 billion at today's oil prices, which are about $45 US. And these are 3 times the reserves in North Dakota. This isn't good for us, okay? We're getting sort of this fracked oil. It's going to be sort of conventional oil coming out, easier to process. It sells at a premium compared to our bitumen, et cetera. And then again, what about renewables? Sorry, okay. I hang around a lot of sort of environmental scientists down in Lethbridge, and they're all absolutely convinced, and I try to convince them otherwise sometimes, that these renewable, they're going to come online. It's just a matter, it's not a matter of if, it's a matter of when they're going to come online, okay? And of course in southern Alberta, we're in a great position too. Lots of sun, lots of wind to do that. US presidential election, I think everybody's mentioned that in their presentations. Good for pipelines? Could be. Who knows? Again, regardless of your feelings on pipelines, I'm not sure what's going to happen here, but it certainly might be good for transporting oil. Bad for trade, again, opening up trade agreements, et cetera. Then we got Brexit and the CETA as well. Those are all wild cards. So everything's so uncertain right now that I don't know what's going to go on. But these are all factors, of course, that could influence our well-being in the future, for sure. So thank you. Did I go? Oh,
do I run it off here?
Yeah. Oh, that's Rick's again. We want yours. So yeah, just
Wonderful. Well, and I guess the bottom line from Rick is, as the Chinese say, we live in interesting times. It's thoroughly unpredictable. Rick and I were talking a little bit about this yesterday, coordinating our song and dance here, and he said, "So I'm your wingman." And I said, "Yeah, you're my wingman." So it's a great setup here, and really interesting stuff that Rick has given us. What I want to do actually is take us in a broader way to think about what is actually going on in the world in terms of labor and in terms of jobs in the future. And my bottom line is I actually going to say to you is that I think we're actually on the verge of a serious employment crisis. And it's going to be a serious employment crisis in terms of our economy, in terms of society, but it's also going to be very much an existential crisis in terms of how we think about who we are as human beings and what is our purpose in life. And I think this is going to hit us actually very, very quickly, a lot faster than people are realizing. But at the same time, what I'm going to suggest at the end of this, because sociologists, even more so than economists, tend to be somewhat optimistic, I'm going to present some solutions at the end of this, things that are actually fairly practical. I'm also going to suggest, and much like Rick gave us a kind of historical thing, seeing how we got to where we are right now, I'm going to suggest that some of the things, the crisis that is impending, is something that we've actually seen before, and we worked through it before. The problem now is a matter of scale, and it's a matter of scope. Because now it's a crisis that is not contained only to, as it would have been 100, 120 years ago, the kind of industrial economies of what was actually a relatively small capitalist West. It's now actually going to become a global problem. But there are solutions if collectively we think through it together. So, these are just a few figures that I've pulled off from the OECD. This is actually the only set of figures I'm going to have here. The unemployment rate you see in the first one here, you see there's some variances here. And one thing to note about all statistics is the statistics have to be understood how they are generated. So we heard about this from Marilyn Waring the other evening, the keynote. That sometimes it's very difficult to do kind of comparison, so we have to kind of be aware of that. I'll give you one really quick example here from this. So the United States, and for years and years I used to hear from people up in Canada looking at it, they'd say, "Oh, look, Canada's unemployment rate is so much worse than the United States. We're doing something wrong. We have to adopt all the policies they have in the United States." Except there were actually certain things that made the United States figure for unemployment substantially lower than ours always. One was they had a huge military. So there's a lot of people that are basically taken into the military who might have otherwise, if you looked at the kind of the characteristics of people quite often end up in the military, might have had a difficult time getting a job, but it was kind of a good job to get into, and you could get educated there, and when you leave, you could hope to have employment. The other thing is perhaps even more important in terms of unemployment in figures in the States was the huge number of people who end up in jail. Right, as you know, it is a phenomenal, I think when the last figures is something like 755 people per 100,000. That's how it's done across the world, the statistics. Canada's is about 115 to 100,000, and in parts of Europe, Norway, it's like 55 to 100,000. So those people are taken out, obviously, out of the labor market. But again, many of those people have the characteristics of people who might find it very difficult to find a job. Right? Come from poor families, poor education, all kinds of issues that interfere with the labor market. So that's simply to say, look at the unemployment figures and recognize that there could be some problems in doing the comparison here. At the same time, some countries do a better job of handling unemployment than others. So you retrain people. Many of the European countries have always been really good at saying we're going to retrain people because we don't want to be paying out money. We want them profitably working in the labor force. And European countries have tended to do that better than, frankly, in Canada or the United States. The long-term unemployment rate is a really interesting one. So this is people who have been on unemployment for a significant period of time, and so this is kind of a gauge of how successfully do people get back into it. And again, you know, some really interesting figures here. And part of the reason for the differences is, of course, that some people just simply drop out. So they stop actually looking again. So they don't get included in that. The final one that is, I think, really telling and is the point that I particularly want to focus on is the youth unemployment rate. And it can be, and quite often is, higher than, for a number of reasons, higher than the overall general unemployment rate. You can see that, again, in some countries, because people just simply drop out, they aren't looking for it. So the United States is relatively low. Some parts of Europe, however, Sweden even at 20.3%, France at 24.7%, and I know at previous conferences here I've talked about some of the problems in some of the other countries in Europe. Some of you may know Greece, of course, has gone through a horrible time. The unemployment rate for young people in Greece has been between about 55 and 58%, and it's going on almost a decade, Spain, right? Too. And Spain is very much the same, yes, and Italy. So we have a number of countries, particularly in the south, where there's a real concern about people who have been out of employment for long periods of time, and when you've been out for that long a time, perhaps a decade, how do you get yourself back in? And there's long-term repercussions for this in terms of, for example, having a family, buying a house, setting up a career, and just simply having hope. Right? So there's, the argument I want to make is that even these figures alone here don't actually properly describe the problem that I think we're about to face. Rick was mentioning, of course, the number of people who are working part-time, right? We had, a couple of years back, we had Guy Standing. I'm not sure, how many people were here to listen to Guy Standing a couple of years back? A number of you. Fabulous presentation. And Guy Standing is the person credited with coming up with the term the precariat, right? People who are in precarious employment, who get in and it's kind of tangential and then they have to drop out again. The kind of employment situations that we're seeing arising around the world right now, either through outright unemployment, long-term unemployment, youth unemployment, part-time employment, precarious employment, is going to create a whole series of interrelated problems. One of the first ones, of course, is economic, right? So that's one of the first things we think about. Okay, what's the problem? We've got people who are unemployed, and if they're unemployed, you know, they're not going to have as much money to spend, and of course we've created a system of this virtuous cycle of production, consumption, production, consumption. You know, it's just typical kind of Keynesian stuff, right? That's what we tried to do after the 1930s, is create a system where there would be demand created in the system so we could get all those wonderful products. Larry Summers, who Rick and I were talking about Larry Summers yesterday at one point. I will say that Larry Summers is not one of my favorite economists, but it's always nice to quote somebody when they come up with a term, I guess. He's been worrying about secular stagnation. So after years of talking about a whole series of policy initiatives, some of which I think have very much contributed to the current problem, he's now started in the last while to worry about, and so I have a number of other people, economists, politicians, policymakers, sociologists, labor historians, etc., talking about a real problem of, you know, the economy seems to be really slowing down. There's less demand in the system now. You know, you'll remember, and you still will hear it every once in a while, somebody says, we've got to watch out for inflation. We've actually been in a deflationary crisis for over a decade, right? And now we're actually starting to see it happen, right? Things are losing in their value, And partly it's because people are waiting for things to keep decreasing before they actually go out and purchase. But a lot of it is because there just isn't demand in the system. When you start to have economic problems, one of the things that I think Parkland has been really good at over the years at trying to do is to suggest to people how things are interrelated, right? You can't hive off things. You can't silo this part of the way reality functions from the way other things are, there's kind of tripwires here, right? The dominoes start to fall. So there's going to be social problems, and our social problems arising, increased inequality. We've talked a lot about that at this conference. The disappearing middle, right? People everywhere. Politicians are talking about the middle class. The middle class is the bulwark of democracy. If we lose the middle class, what's going to happen, right? Interesting enough, for the last number of decades, certainly in North America, people talk about this thing, the middle class. It's not really a class, it's just something that everybody ascribes to. But politicians are worried about it. Again, high and persistent unemployment and underemployment. And what does that mean socially? It's not just a kind of an economic issue here. And finally, earlier we heard a quote from Gramsci. Gramsci understood it really well when he talked about, the interrelated problems, society, how it comes out in a political form, and sometimes a very virulent and dangerous political form. Disillusion with the traditional parties, as we saw in the United States with Trump. The line, though, has been, I think, properly drawn there. A lot of people started to talk about Brexit, and even Donald Trump, of course, cheered on Brexit, because the lines were actually starting to become really clear there. And even before Brexit, those problems, as I said, in the southern countries of Europe, where the unemployment rate was rising, and you had the indignados arise in Spain, where you had Syriza arise in Greece, where people started to say, we want an alternative. There's something going wrong here. And unfortunately, in the case of Syriza in Greece, in the case of the indignados who have been stalled in Spain, workers are not ideological, right? There is no particular ideology that people go to. They do have concerns, they have fears, they have angers. And if the left, the progressive left, does not offer an alternative, and when parties are elected that don't seem to actually come through with a solution, those same people will move, right? And in Greece, Golden Dawn is still small, but it's a neo-Nazi party that is growing in strength because people are frustrated. They want something. And the same with neo-Nazi parties right across Europe. And the same anger, the same frustration, the concern about where's my future, all of the mainstream political parties seem to have failed, and people will look for alternatives. And again, Karl Polanyi wrote about this, the Great Transformation. It's a fabulous book. More and more over the last few years, every time I see these things, see the pattern, I think, boy, Karl Polanyi had it, right? He saw that this is the trajectory we're going because of the way politics and the economy has operated. So how is this tied to the jobs crisis? People want to have a living. They want to find meaning. They want to find work. There's a lot of solutions that have been offered over the last number of years, and I think they quite often solve a short-term problem and then create other problems, right? We're not very good sometimes at actually figuring out unintended consequences of bad decisions. Short-term thinking leads sometimes to long-term problems. The idea of low interest rates to encourage borrowing. Why have we done this? Again, I talked about this a couple of years back, actually, I think here. Part of it is we started to actually offer low interest rates to encourage borrowing because we weren't actually keeping wages up. But we still had that virtuous cycle. We needed people to keep buying things, so we offered easier and easier credit. Interesting enough, of course, now interest rates are probably going to start to rise, and that's partly, though, because the central banks, that was about the only arrow in their quiver for the last number of years. They kept saying, if we just keep interest rates low, it's going to pay off, right? But it hasn't, we've still kind of flatlined in the economy. And of course, in the case of low interest rates and easier credit, well, that was one of the major factors behind the Great Recession. We had lots of people suddenly defaulting because when they lost jobs, they couldn't pay for it even with the at the interest rates it was. Stimulus or deficit spending. We see the government federal government talking about this right now. This is a tried and true kind of thing. There's a problem. We're going to stimulate it. Government's going to step in. Nothing particularly wrong in the short term about this, and there always are kind of infrastructure needs that we have to meet here. But you do realize at some point these are also accumulating kind of deficits and debts, and unless you go and find the money, and Larry was talking about the craziness of the way we don't tax the people who actually have the money. Remember Willie Sutton? Willie, why do you rob banks? Because that's where the money is, right? Well, if you want to find money to pay off things, you go to the people who actually have money to pay off things. And we're going to accumulate larger and larger deficits and debts unless we actually deal with that. And the idea of, these three triple P things is really just privatizing things by other means. Private companies aren't going to get into building infrastructure unless they're getting a good return on it, a very good return on it. And so that's just accumulating more debt. There is the other solution that is offered, and it's been a disaster in Europe, austerity, right? We can't afford it any longer, so we're just going to start cutting things all over, except many of the things that you end up cutting, besides being immoral, unethical, socially and politically dangerous, are also really economically stupid, right? Because good health, good education, safe streets, all of those things are things that lend themselves to a good economy, right? So it's smart for some politicians in the short term to say, we're going to handle this, we're going to deal with the deficit and the debt, and we're going to get those guys in the public sector because they're the guys that cause this problem. And so you can get elected on it, then you have to face the consequences of that, or someone is going to face the consequences. Again, tax cuts. The idea of tax cuts is supposed to be you're going to stimulate demand, but again, it creates problems of deficits and debt. The last thing I want to bring up, and again, this really gets back to, I think, the impending problem, though. We have a great belief in the West, and I work at a university, I train, I educate students, at least I hope I am. Some of them may question that. We have a great belief in education and retraining, and it's not totally misplaced. But it may not be the panacea that we've always thought it would be, right? It may not be the thing that is going to absolutely save us. I happen to think education is valuable in itself. It is a civic thing. It improves democracy. It improves the way that we interact with each other. It is a very useful thing, but to think that this alone is going to save our economy, Alberta has an incredibly well-educated population in many areas, right? And we have also a lot of people who drop out of school historically. But Canada has the best educated population in the world, right? We train a lot of people. We have more people with PhDs and masters and technical skills, and yet we still see unemployment, underemployment, precarious employment, right? And it's particularly spreading among the young. So it isn't the total solution here. So what is actually going on here? One thing is there is, and I want to tie together here, technology, power, and where we go in the future here. Technology is certainly a big part of the story. Right? You've all heard about the Luddites, and of course going around smashing the machines here. And the image is, here's a bunch of guys just really hated machines. Let's just go out and smash them. But there's a lot of other stuff going on. legitimately, just as any people around today are concerned about their incomes, they're concerned about work. They were concerned actually very much about status as well. Status, how you feel about yourself, your position in society was part of that story as well. These were quite often crafts workers who had a particular kind of prestige in the community. And it was a way of life. It was how they saw themselves in the community that was being taken away, right? But if you show people that technology can be their friend, that it can help you to do your job better, and that you're not going to lose those things, you're in fact going to get a better life out of it, then the equation starts to change. Technology is changing not only the way we work, but how much we have to work and even how we define work. Remember, we used to work huge number of hours. I remember my dad, he worked as an auto body mechanic when he moved out from Winnipeg in the 1950s. And he was always working on Saturdays as well, and he worked really long hours, right? And he worked, it was pretty difficult work. Now, of course, a lot of that stuff is done with computer stuff, right? If you don't know computers and all the technical stuff for fixing your car, then you probably can't do that kind of work. But it was really long hours. The 45-hour workday, or even 50, was not an unusual thing, even just a few decades ago. While we fought hard to change the number of hours that people have to work, the working people have to do it. But we keep forgetting this problem. One of the things that people don't understand about the Great Depression of the 1930s is they haven't made the connecting blocks that mass production, you remember Henry Ford, you can have any car, color car you want as long as it's black. 100 cars a day rolling off seems like a small number now, it was phenomenal then. Mass production in all kinds of areas, not just cars, had really taken off in the 1920s. And people were already being dislodged because Henry Ford didn't need as many workers. Lots of people companies didn't need as many workers. So we suddenly already had an unemployment problem coming about. How did we deal with it? Well, we dealt with it by finding other ways to employ people. We found ways to get money into people's hands again, and we created, after the war, new ideas of the welfare state. One of the things that has happened over time is a number of sectoral changes, and again, they're tied to technology. We've moved from an agricultural economy. We said, okay, that's fine. We don't need as many people on the land. We have new machines for that. But those people now got employed in factories, industrial work. But we've moved out of industrial work now because we have a lot of machines now. Again, the same thing, robots on those lines, they can produce fabulous amounts of stuff, and we don't need as many people there. And we've moved into a post-industrial economy. High-end things, finances, services, but also a lot of people working in retail, fast food outlets and stuff. But what we see is technology again, even replacing jobs in the service area. So we have now robots in factories, of course, but we have instant tellers. The banking system, all the jobs that quite often is jobs that women were working in banking systems, going to be replaced. They are being replaced. Self-serve counters everywhere. As consumers, we think we're really smart because we get to do all the work and not get paid, but we don't actually get any other benefits in terms of the drop in prices particularly. Automated distribution warehouses. Been stories over the last little while here how the Bay is going to all these, and these robots are moving around picking stuff off and shipping stuff everywhere. Those are jobs that are lost. And of course, lots of talk about self-driving vehicles. What is actually happening here is that, as someone said the other day, anything that can be routinized, anything that is kind of predictable kind of work, anything that is kind of you're going to do over and over and over again the same way, machines can do it. And frankly, they probably can do it better than we can. They can do it faster. They're going to mass produce this. All kinds of things. What human beings do is, however, all kinds of really creative interpersonal stuff. Stuff where you actually have to to think and interact with people. And that's where we need to actually think about where jobs are going to be. So, how much time do I actually have here?
Maybe 7 minutes. I'm out.
Okay, I'm going to really try to rush through it. So, technology, as I said, could be our friend, except we don't use it very well. And part of the reason we don't use technology really well is because we don't actually control it. You know, there was literature years ago about the labor process theory. I won't go into it at large, but the way that technology is employed is not just kind of a neutral thing, right? So the owners of companies, those who have capital, have always employed technology because it's a mechanism for making some kind of profit, right? But how we use technology and who benefits from it is something that can be debated, argued about, and it is a terrain of conflict. The idea is that if people were being displaced by technology, in theory, the way it's supposed to work is those people are now freed up. They're liberated to go now and do something wonderful, right? And that's wonderful in theory, but if you actually don't have power to make sure that they can be employed in some other useful way, then they're left on the sidelines. And that's where you get unemployment, that's where you get social conflict and political conflict. Keep in mind again here that also unemployment to some extent has an effect on lowering wages, right? So you play worker off against worker. So the use of technology to replace workers also then has a knockdown effect on other workers. So bottom line, the introduction of new technologies is not neutral. It's really a reflection of class relations in the workplace and society. And in order to redress this imbalance, you require political and societal intervention to think about, okay, we've got this technology, how are we going to use it in a way that is going to be fair and just and is not going to create other problems for us in terms of the economy and society at large? So here's some solutions. Many of these you've heard before here, certainly at past conferences. Control the mobility of finance capital. I won't even bother go into that. I think it's kind of a no-brainer, even though we've now talked about 25 years and really haven't done anything about it yet. Tax fairness, if simply again for that purpose of we've got to find a way of getting money into the people's hands who are actually going to be able to spend it. Otherwise, if some groups have huge amounts of money and they're saying, I'm not going to invest unless there's a sure profit there. Well, right now there are no sure profits, so what they do is they hoard it, and now you've actually decreased demand again. So you got to find ways to get money in people's hands. Introduce a guaranteed annual income. There are some problems potentially with it, but I worked on that program years ago in Mincome in Manitoba. I was sold on it then. I still remain sold on the idea it's an important thing. Here's the existential thing that I wanted to get to. I think we need to redefine what we mean by work and also what we mean by leisure. I think that the way we've seen work has always been about producing stuff, right? Lots of stuff. As George Carlin said, and I remarked to Marjorie Cohen at one point yesterday, George Carlin has this wonderful thing. He says, why do we need 3-car garages? Well, it's because we need a place to put our stuff, right? The jobs in future are not going to be about producing stuff. Machines are going to be doing that. So we have to redefine how we think about what is socially useful work, if only because we have to find a justification for why we put money in people's hands so they can then buy that stuff, right? To keep that virtuous cycle going. We need to redistribute, certainly more greatly equalize wages and benefits arising from growth and productivity, and again from that wonderful technology. As has been talked about, Larry was talking about it again. One of the things about presenting at the end of the conference, I feel like everything I wanted to say has been stolen by everybody else. Strengthen workers' rights to unionize and for a greater say over the organization of work. And by what I mean by that is how technology will be employed, right? when it will be introduced, for what purposes, and how you're going to deal with that introduction, right? And that's a real role for unions. But here's my other challenge here for you, labor unions. And I will say I think labor unions in this province and across Canada are actually pretty good at this because they get the big picture. Sometimes some of the unions in the States, I'm not quite sure, the same. We can't fight about saving every job just because we want to save that job. Remember, some jobs are really horrible jobs, right? Some jobs are unsafe. Some jobs are dirty jobs that people die off early as a result of having to work them. We can use technology for pro-social purposes. The key thing is the fight should be about what new kinds of jobs we're going to create. And I think most of those jobs, as somebody said yesterday, is going to be in the service sector, in the social services, in the human services, long-term care things. Tell you another one's a favorite one for me. Why is it that we have been convinced that in high schools that it's a good thing that the ratio should be 30 or 35 students to one teacher? Why can't we do it at 15 to 1 or 10 to 1? Why is it at universities that I have to go into a classroom and be teaching 150, or some universities you're talking about 1,000 students? Why? Why can't we have classes where we talk about ratios of 20 to 1 and students and instructors are sitting around having seminars and working through ideas rather than having to mass produce multiple choice tests, right? We have an incredibly educated population. Let's think about how we use those people in a much better way than we have in the past. And that is the kind of thing that is going to transform our employment situation and change our society for the better. I've left some sources here. This will probably be up, so thank you.
All right, thanks to both of you. Unfortunately, we don't really have a lot of time, or any time, rather, left for questions. But you can, we got some really good information, I think a lot to chew on from this session. And if you do have questions, I'm sure the two of both Rick and Trevor will be around and you can chat with them a bit. But we do have another session starting at noon, our last one with John Ralston-Saul, so don't go too far away. Be sure that you stick around for that session. And I'm also going to get our mic runners here to actually distribute some feedback forms, and maybe they can just stand by the exits. So as you're going out for your break, that they can do that. And I have a gift here for Rick.